Hello, good people, and welcome back to Unit 3 on taxes. This is Lesson 2, Paying Taxes, and I want you to pay your taxes and stay out of jail. That's what I'd like you to do. Alright, so real talk, you will go to jail if you don't pay your taxes, so for real, pay them. Alright, so first of all, how do you know how much you even pay from your income? How do you even know how much you're getting charged in taxes? Well, we have this marginal taxation system. So we know that the margin means like one extra of something, because marginal utility, which should be a review term for all of us, means the value added from like one more or a little bit more of a good. Okay? Now this is not a good, this is the value of what you're paying in taxes on one more dollar. Just one more dollar, okay? So this is the rate of tax you pay on each additional dollar. So we have what's called a progressive system, and this takes the shape of brackets. All right. Additionally, a progressive tax system should be a review term for you also, and I hope you know what it means because there's a question coming up. If you said that a progressive tax system means the more you make, the more you pay, you'd be correct. Great job. Give yourself a high five. Okay, so for a progressive system, for example, the first set of tax brackets is 0 to $9,875 is 10%. Let me pull up the current tax brackets. Tax brackets for 2020. All right, so let me show these 4 more rows, if it will let me. There we go. All right, so if you are single, go away. All right, if you are single, which typically until you get married you will be, on your first almost $10,000 that you make, you only pay 10% tax on that. All right, so let's say that your overall income is you're kind of big ball and shot calling. Let's say you make 40 grand a year, okay? So on your first $9,700, you're going to pay 10%, which means on this first little chunk, you pay $970 in taxes. Okay, I'm going to do this calculation while we're going. All right, for 9701 all the way to 3945, so 40,000 minus 39,475. All right, so that next one is 39. I'm doing the wrong math. 39,475 minus 9701. So that is about 29 grand times 0.12%. So that's $35.72 and 88 cents, and then you make 40 grand, and that minus what you've already paid taxes on all the way up to your $39,476, okay, is $524 times 22%. Ooh, math is hard. Times 22% is 115 and 28. So, all in all, you should be paying 3572.88. Excuse me while I do math, children. This is not my strong suit, hence why I have a calculator in front of me, but you can't see it. So, total, you should be paying $4,658.16, in taxes. That's how that works. So you pay 10% of this amount, and then from your $9,701 all the way up to your $39,475, you pay just a little bit more on that, okay? And then just a little bit more on that, and so on and so forth. And we can think of these like buckets, okay? If you fill up this $9,700 bucket, boom, pay your 10%. If you fill it all the way up to this $39,000 bucket, boom, pay 12%, okay? And so on and so forth all the way up to the top, okay? Now, let's hop on back over to this Prezi, okay? So that's an example. Who pays the most? That would be people who are rich. So if we pop back over here to this, those who make $500,000-ish or more pay $37,000 on everything above this $500,000 if they don't get a tax break, okay? So who pays the least? Those who are poor, okay? So we're the lower class, and that's how a progressive system works. Those who earn smaller amounts pay smaller amounts in taxes. And we'll skip that, and we'll put that in a separate box. All right, so how much came out of my paycheck? Well, you have a specific form that is going to tell you how much came out of your paycheck and how much you are allowed to kind of deduct off of that. Okay, so the amount that you are supposed to pay in taxes might not be quite as much as you think. All right, so you've got a lot of forms that we're going to have to talk about, and the IRS has named these with numbers. Don't ask me why. I don't work for them. Okay, all right, this is a 1040 form that we're about to look at, and that is for people who are self-employed. A 1099 is people who are an independent contractor, and a W-2 is pretty much everybody else. Okay, the vast majority of people in their life are going to get a W-2, and they'll receive this from their employer. Okay, all three of these forms simply tell you your wages, and they will tell you how much you owe in taxes, typically speaking. Okay, so if you're self-employed, you fill out this one. If you're a contractor, so for example, I used to be on the trustee board of my sorority, and I used to work with our director of financial operations, or our DFO. She was our book lady. And she handled all of our tax business. She was a contract employee, so she had to sign a contract every 5 years to work on behalf of the sorority. All right, and she fills out a 1099 or receives a 1099 from us each year. All right, now, one thing about W-2s, they're typically not itemized, okay? All right, so let's look at this 1040. These individuals, this is a married couple, and they have both put their combined incomes on here. So you'll see on this top line, you have to read which line it says. You have to pay very close attention, because if you fill this out in the wrong way, the IRS is going to send it back to you and be like, this is wrong. They're not going to tell you how to fix it. They're going to tell you that it's wrong and to fix it, and you're going to have to pay a $150 refile fee. Okay, I did that one time in my life. I'm never doing it again. Just use TurboTax, okay, or like whoever your friend is that is a CPA. All right, so your wages, salaries, tips, blah, 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 are $123,000 to be. These individuals earned $1,000 in interest. Okay, so they earned that. That is coming to them from maybe a retirement account. In line 6, that is the total income. Now, they were able to deduct some of this because the husband and wife and their 2 kids lived out of the country for a year. So they were able to deduct this amount. So the government cannot touch any of this almost $74,000. The government can only start even thinking about taxing $50,000, okay, on here on line 6. So number 7 says adjusted gross income. And remember, gross in this unit does not mean nasty, it means total, okay? So they had a little bit of an adjustment to their income because of a whole bunch of different factors, and then they get a standard deduction. Okay, because look, they're married, all right, and they're filing jointly because both of their incomes are over here. So they can additionally take off another $24,000 from this that the government cannot touch. So out of that $123,000, the government is only allowed to tax $26,299. That's it, okay? All right, and then a couple of other numbers over here. Total taxes, yada, 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 and they owe taxes back. Okay, so they owe $2,714. So this is a 1040. Typically speaking, in a 1040, and this is a little bit old, this is a few years old, but typically your 1040 will come in a set of 4. So it'll be one big sheet that has 4 sets of this. One is for you, one is for the IRS, one is for your employer, and then one is for another set of records, just as a copy. All right, and this is a 1099-K. All right, it's a specific form of a 1099 that talks about expenses and transactions. Okay, so more payments up here, 74K, and number of transactions is 2. That's a lot of transactions. Okay, this person's from California. All right, so this person has spent a lot of money in here. If you're a person who is an independent contractor and you are showing like the money that you're making each month, that's typically going to be required of you over here if you're a contract worker. All right, and this last one is the one that you're most likely going to have at your future job, a W-2. Okay, why they name these things letters and numbers, I just don't know. All right, so this is the employer's name, okay? This is the employee's social. Obviously, it's a fake one, okay? Hopefully, you know what yours is. All right, and so this is his wages and tips, yada, 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 $50,000. Income tax withheld, only $1,000. And then Social Security is not taxing your whole $50,000. Social Security is only taxing $45,000, okay? So This is just an example. All right, and then let's keep moving to this question. But do you have to pay all of your taxes? The answer here is nope. Okay, we have these cool things called deductions. All right, so these are ways to reduce the amount of money that is taxed. All right, and these are given to you by the federal government. You can't purchase these for yourself. Okay, now the first one is a standard deduction. You literally just slice off from the top $12,400. That's this year's bracket. $12,400 just slicing off the top, and then the government gets to tax the rest. All right. And so if you think about those brackets that we looked at over here, let's say you were making $40,000, but your standard deduction swipes off 12 grand off the top. Look at that. That bumps you down from this higher 22% tax bracket back down here to this 12% tax bracket. So you're going to pay less money. So our original estimate of about $4,600, probably going to be a little less by the time we get done with these deductions. Okay, so if you're single, you're allowed to take $12,400 just straight off the top. But if you are married, you get, and you file jointly, and we'll talk about what that means in a little bit, you get to double that. Okay, now if you are a person who is maybe self-employed and has to file or has to receive a 1040, you might benefit from an itemized deduction. So instead of you just having the government be like, you know what, you can take that 12 grand to yourself and we're not going to tax it, you might have enough business expenses that exceed $12,000, and so you might want to itemize the things you deduct. So you might want to make a big list, like a receipt kind of, from the store. So it's like a receipt of things that you have purchased in order for you to subtract them from your taxes. So when people tell you to save your receipts, that's what they mean, okay? All right, so which one is best to either do standard or itemized? Well, it depends, okay? You pick the deduction that is the biggest amount, so your brackets will be the lowest possible. So like, for example, me, I just take the standard deduction because I don't purchase over $12,000 worth of stuff for my job to be written off of my taxes. Remember, write-offs is a review term for us, okay? My mom, on the other hand, is self-employed, so she spends probably 12 grand via like her car. She has a home office, so her home office counts as a deduction because she has a little piece of our house, my parents' house, I should say, that she uses for work. Cleaning supplies, since that does clean part of her home office, she can write off of her taxes, and that sort of thing. And we're going to skip this video, even though it's super clever. Look at this, y'all. I have that in the little computer. Look at me go. All right, we'll skip it. I'll put it in a pause box so you can watch. All right, so what actually counts as a deduction? Well, it depends, okay? Education counts as a deduction off of your taxes. You do get an education credit if you've gone to college. They might have one for trade school. I'll have to check, all right? Your children count as a deduction. You can take 2 grand, slice it right off the top if you have kids under the age of 17. All right, so if you are over the age of 17, your parents can still write off $500 off of their taxes for children. Home ownership can count as a deduction. I do believe in the 2020 tax codes that is no longer a thing, which makes me sad because I'm buying a house, okay? All right, supplies count as a deduction. Like I said, my mom counts cleaning supplies as a tax deduction because that's how she rolls. All right, and a whole lot more stuff. All right, as a side note, pop this over into the margin. This is a listening check, okay? Pop this in the margin or else. All right, so a side note here, incentivization is what happens when the government gives tax breaks for specific items during certain times. Okay, now you're like, Ms. Harris, that is vague. Yes, it is on purpose. Okay, so for example, for a few years, the federal government gave incentives for putting new windows in a house. There was a 6-year period where they would give you a tax break if you put a new AC unit in. There was one for putting a new roof on your house. A lot of that had to do with home ownership. There are also a few for like redoing like plumbing and wiring and random things like that. All right, so different improvements to your home would give you a tax break, but this is very specific because it only applies to people who are able to own a house. All right, same thing for like education. That only applies to people who are able to go to college and pay for it. So that can be a little controversial. All right, and we will take this up in our next half of the video, in part 2.